Daniel Foch, one of the two hosts of the Canadian Real Estate Investor Podcast, and Simon Belanger, one of the two or three hosts of the Canadian Investor Podcast.
That's right. Yeah.
Yeah.
The one
We,
constant there. Yeah.
yeah, yeah, I guess you are. The, you and I have sort of just become hobby macro observers, and we had these sort of like regular macro phone calls we were doing anyways. So we were just like, why don't we turn this into a show? So that's what we're doing, and hopefully you guys like it. I know you just mentioned to me it's been pretty well attended on the actual podcast feed for the
Yeah.
recordings. I know
Hmm.
on X we seem to get like 250 views. So we're live on like as many platforms as I can possibly figure out how to go live on at once. TikTok today for the first time, Instagram, uh, X, LinkedIn, Facebook, Twitch, YouTube. I think that's it. That's it. That's
Well,
everything.
that's
But that's pretty much
yeah.
everything that they'll allow
Gonna
us to
figure
go
out
live
like
on.
maybe
So
an Alibaba platform or one from China. Maybe get on there. So yeah,
yeah, yeah.
we might
WeChat.
get
Is it
blacklisted
WeChat?
though.
Yeah,
WeChat.
WeChat, I think is what it is. Yeah,
Yeah, pretty sure we'll get blacklisted by the CCP, but worth a try.
maybe not. I don't know. I mean, like I feel like they have. I don't know. They as long as it's not. I think we talk pretty objectively about everything, so but we
Yeah, I
might
think
not make
so.
it
And
past the
just
Great Firewall of China.
I guess we both have kids in the house today, so if you do
Yeah,
hear some screaming, crying, we do apologize. We have some on each end here.
everybody's kids are homesick right now. It's a
Yeah,
Canadian tradition.
yeah. So
All right,
let's get
what are we
started.
talking about today? Yeah,
Yeah, so we're going to look. So I know we've been texting quite a bit about oil prices and contraction in the economy. Obviously, a lot of talk about recession. We've touched on the topic a couple of times, I think, in the live stream. But I found an interesting study. I know you found some interesting posts and some readings on that too. Aside from that, we'll be talking about the US CPI, PPI. I think some really interesting data that came out. We talked a little bit, Dan Cand and I, on the show earlier this week, just the CPI, just to get a quick idea of what it might look for Canada when it's released next week. But with PPI coming out too, with a strong correlation of things to come in the past, PPI versus CPI, so that will um, potentially show us what's going to happen. We'll talk a little bit too about semiconductors and the parabolic rise almost that we've seen in semiconductor stocks in the market overall. And then aside from that, I think there's also the announcement, or I guess rumors of announcement for a potential agreement, but still some stuff that needs to be sorted out between the federal government and the Alberta government for a pipeline from Alberta to the West Coast. And am I missing anything?
no, I think you're good. I think that's it. The selling of the ports, which
Oh
it's
yeah,
kind of speculation, but there's some articles out
speculation.
on
Yeah.
it, so we'll talk a little bit
Mhm.
about the alleged selling of the ports. Which, it's funny. Like, I feel like we talk about this a lot, but like the people, the cognitive dissonance in like people in different political spheres of like, people who are liberal and small L liberal before were like anti privatization of everything are now like, oh yeah, it's fine, and people who are conservative are now like, well, when are we, we're selling off the whole country. It's like, wait, like, do you know what your political views are? So this part's been funny for me to observe.
Yeah, and I don't know about you, but I've had people try to label me like conservative or on more one side
Oh
or
yeah, I get it all
anything,
the
and
time.
I really view myself, and knowing you enough, I think we're both. I think we classify ourselves more as independent, right? Like I don't think we belong to any really sphere. We're probably a bit more center, and we try to judge as best as we can on what the actual government in power is doing, not you know our political affiliation. But for us, it's not an issue. I think we're more independent.
Yeah, I like my view on this, like the politics stuff, is pretty simple. It's like I actually just think like trying to categorize all of it is like just inherently kind of stupid, to be honest. I think that like, but if we're like not looking at things objectively, especially from like an economic lens, like I think that the economy as like a system is the most democratic system that we have. It's far better than voting. People can allocate capital based on their, what they value. They communicate their values in the way that they spend their money, right? People vote with their dollars on a near constant basis. And so I think that politicians want to sort us into groups of people, and we fall in line by doing that, by saying that we're X group or Y group or this part of the political spectrum or the other part of the political spectrum. Um, and I think that it's an exercise in divisiveness, which makes us easier to um, lobby or sorry, rally to vote for a certain thing, makes us easier to control. It makes us easier or makes us less likely to stage a revolution if we're busy fighting one another rather than fighting them or observing like the class war that's happening. They're telling us it's like a left and right or a identity this or whatever it is, ESG versus like fossil fuels. Like they cut everything up into all of these different categories. But the truth is like they're just kind of uh, breaking you up into different groups so that you can you are ignoring the fact that like disparity is the highest it's ever been, and usually when disparity runs this hot, you end up with like a political revolution, right? So I don't know if we'll see that because I think that
Mm.
bread and circuses, we have like supercharged bread and circuses now with like social media, dopamine, constant like
Yeah,
dopamine
yeah.
feeds and AI, but
But
it's an
also, it seems
interesting
like
thing.
there's a lot of this divisiveness on sometimes like stuff that, not that it doesn't matter, but it's not in the grand scheme of things. It's not really important, right? Like I think a lot of people that would have been extremely pro ESG right now are coming to the realization that if your energy costs are soaring or you're having trouble putting food on the table, those ESG concerns kind of take, you know, they go on the back burner, right? They, if you're having
Yeah,
trouble living and feeding your family, I think your focus shifts from that to self-preservation and surviving, right? I think a lot of people are probably realizing that, and I think it's also a reflection of the economy we're seeing. I mean, I think it doesn't take a genius to see that we're living in a K-shaped economy right now. Middle class
yeah,
is shrinking, and then you have the top of the K that are spending, keeping the economy afloat, at least on the consumer perspective, and the bottom are having trouble making ends meet. And then, especially if we start seeing some more inflation, um, it's going to be, yeah, even more difficult for those at the bottom of the K.
yeah, yeah. It's funny. Like I feel like I was talking about, and Nick and I like talked about this a lot on the on our show in the past, but the K-shaped recovery, like we've sort of been beating that drum for I want to say like years now, and now it
Yeah.
just seems to be a very very popular choice of language around what's happening in the economy right now. The thing that you mentioned like about shifting priorities, Angus Reid put out this survey, which would probably be a typically left leaning, uh, I guess, data house. But now, like what you just described, like it's very clear how quickly this has shifted, right? So you go back to 2021, and Canadians prioritized environmental protection, which you can see here at 63% over economic growth. And now 61, it's literally flipped almost completely, where 61% prioritize economic growth over environmental protection. So you've seen this shift, and I agree with what you're saying. Like it's very easy for us to sort of like invent problems when we don't have any real problems, like or find enemies to humans want to struggle, right? So it's just I think it's just like an inherent part of like what makes us feel like alive, that we want something to like sort of allocate the experience of suffering that we feel of just like human existence. And if our economy's strong and we're all wealthy and nobody's really like feeling stressed or having a hard time just getting by, it's easy to just be like, oh well, the environment is our war, is our great war right now,
It's our
or
purpose. Yeah, finding
yeah,
purpose.
yeah,
That's essentially what it
yeah.
is, right? Yeah.
hmm And but now we actually have real problems, and so people are like, well, maybe now we prioritize the real problems, which are things like economic growth, and not to say that any of those other things are less pertinent problems, but we have more problems that we have to actually face head on. That those things just tend to go away and not be as as important to us as a result, right? So I just find that that shift, and this chart documents it exceptionally well. This shift is incredibly fascinating from my perspective. And I guess maybe we should just start with the pipeline then, because
Yeah,
they announced some news on the timeline there.
yeah.
Um, so what's your thoughts on this? Because I know you pay a lot. I kind of this is how I know that the market's getting crazy. Is like I'm back. I'm paying attention to stocks again. You know, I'm getting some positions. I'm making some trades. It's probably a good
Oh
top
yeah.
indicator for everybody if
Yeah,
anyone's looking for one.
you've been
Yeah.
yeah texting me more about certain trades. I can tell. Yeah.
Yeah. So,
Yes, I'm just.
but
This is what we're referring to. So, like I said, there was a Wall Street Journal article. I think you said what the Financial Post had one too, or the Toronto Star.
yeah, I don't know what the one was
Yeah.
that you and I were that or I think I sent you one in Toronto Star, but if Wall Street Journal's covering it, I mean it's the even more credible thing as well, I think, right? So
Yeah, and my understanding, I mean, I still haven't seen the announcement today, but I guess we're recording it's still morning in Alberta, so maybe it'll come later today. But apparently, based on this, and I think the article you read too, is they're supposed to announce some kind of an agreement with some carbon capture in place, but that would also bring in some federal support for the pipeline going from Alberta to the West Coast. I think there's still some conditions based on what I read where there would have to be private sector um, that would be involved in the project, I guess leading the project, and the federal government would act a bit more as a backer from what I've read. Again, we don't know until the actual announcement is made. I don't think it's anything finalized, but the Alberta would kind of give in on the carbon capture side, and then the federal government would provide some support for the pipeline, which of course hasn't been really there in the past, at least under the previous Liberal government.
yeah, so what are your thoughts on this? Like I know, where oil is right now, it feels very economically compelling for Canada to get to play a bigger role in the oil markets and oil trade. But like is it like I'm all for diversifying Canada's economy.
Mm-hmm.
We need to do this. We need to get economic growth that is outside of us being dependent on residential investment, banking sectors, like sectors that you just shouldn't your economy shouldn't be. If you have the most or second most resources in the world and you share a border with the largest economy on earth or second largest depending on the metric, we should probably be um, doing a better job at like being producers, right?
Mm-hmm.
Extracting resources. So like I think this is a step in a positive direction. I guess my question for you is it actually an economically viable trade? With the way that Canada's oil market is kind of structured.
I mean, to me, I think it makes a whole lot of sense, especially with what we're seeing right now in the Middle East. If we need a wake up call, I think we are seeing it right now where we can really leverage our situation if we can get that oil out to the coast with an S, not just the West Coast, but I think the bigger project will also be from west to east. And it's something I talk, or actually it's going to be released on Monday, but I think the west to east is extremely important because a lot of people think about Canada as a net exporter of energy, but the reality is that yes, we are on the aggregate, but out east, Ontario, Quebec, Maritimes, we actually import some oil because we just don't have the
Hmm.
infrastructure to get it from west to east. And if you want to have some energy independence and from a national security perspective, I think you have to start thinking very seriously about having that kind of infrastructure. So pipeline from west to east. Of course, people will say you can still carry some by rail, and that's true, but we saw the Lac Mégantic explosion, I can't remember when it was, 15, 20 years ago, that I think has turned off a lot of people, especially in Quebec, in terms of uh, having oil transport on trains. But it is feasible, but it's more on the margins. If you really want the volume, you need a pipeline. And I think from an energy security perspective, I think that's the other project that's probably to me the elephant in the room. Like if
Yeah.
there is a time to get that project going and support, I think right now is the time. Because do you want to be like Australia or India. We saw Modi that actually was essentially
Crazy, eh?
telling people, telling Indian population that they have to start taking more public transportation, carpool if they can, reduce their usage of gasoline. I mean, India is a major country in the world and they're starting to see the impacts. Do we want to have that same kind of situation in Canada when we really shouldn't? We have the natural resources, we just need the
Hmm.
infrastructure here.
Yeah. I guess that actually it's crazy. I feel like the countries that, like that aren't wealthy, probably stand to fall into a lot more trouble as a result of this oil price issue right now, right? Like,
Hmm.
and in India being a good example, even China, a lot of the East. I mean, everybody's gonna feel it, but I think they're really gonna melt down a lot quicker from an oil price shock than Canada or the U.S., where we have domestic production capacity, we have reserves, etc.
Yeah, yeah, and I mean, obviously, the project is from to the west coast, but the other argument from west to east is we want this government is clearly trying to get even closer to the European Union and European countries. Well, if we want to be able to support them in the future and give them another way to acquire oil outside of the U.S. and the Middle East or even Russia, um, why having that west to east pipeline would be a pretty big step in that direction. Don't get me wrong, this would be a massive project. There'd have to be federal guarantees. They'd have to negotiate with indigenous people, the various provinces, because you're going through a bunch of different provinces here. It would be major, probably a consortium that they'd have to do. But I think if there's any time that you have to start thinking about these big projects, I think that's now is the time. And of course, you try to do it as, um, in concert as much without to minimize the environmental impact. But if you start thinking on the grander scheme of things, what China is doing, like they don't care. They're just going for energy, whatever it is, right? Whether it's
Hmm.
coal, whether it's solar, whether it's nuclear, you name it. They don't really care where it's coming from. They just want to be as independent as possible for energy. So that's why, yes, there are some environmental concerns, but you have to think about, I think, the planet in the grander scheme of things.
Well, I think China also has been like crushing it on renewables, right? Like they don't want it. Like, yeah, there's consequences, but they also have like one of the second largest populace on Earth. They have the highest energy demand on Earth. Like, yeah, they're gonna use a lot of coal as it stands right now, but it's not like they're um, planning to do that indefinitely. By the way, it looks at least. And there's a couple of charts I had on it. I'll try and pull
Mm-hmm.
them up. I wasn't really prepared for that, but I'll go find them while you're chatting. But basically, like I think you know it seems like from my perspective that China is like they saw this early. They just started producing like and an insane amount of electricity. And I think if you go to like the
Well,
U.S., the
they
U.S.
saw
is
their
kind of ironic.
vulnerability early, right? So
Yeah,
they saw that they
yeah,
could be vulnerable from there, and they also built some massive oil reserves too. Yeah.
yeah, yeah. And I think the U.S. and Canada are like much of the Anglosphere. It looks like we have so much red tape and like NIMBYism. Like you're seeing it with the data centers right now, right? Like have like Bernie Sanders and AOC saying like they're trying to completely stop data centers, and people are you know uh showing up at public hearings doing about data centers, with protesting and all of that stuff. And it's like how can you have economic growth when everything takes so much time and energy, and you have to like kind of meet all the needs of all of these different groups of people? China, I think, like that's where authoritarianism really shines, right? They're just like, we're just gonna do it. We don't have to ask anybody. Come to the meeting if you want. We're not gonna listen. So um, yeah, it's interesting in that regard. But sustainable energy in the U.S. or renewable energy in the U.S., like Texas, which is what you wouldn't expect. Texas is actually the biggest producer of wind and solar right now, and it's because they can just get stuff done, right? They don't like if they want to build a solar farm, they just do it. They don't. It's not like in California and most of the West Coast, who likes to talk about this stuff and virtue signal about it. They have so many layers of red tape wrapped around everything that they actually can't really produce results, which is ironic. I don't know if did you see that post on Twitter about how Texas is kind of like leading the charge on that in
Yeah,
the U.S.
yeah, I saw
Yeah,
that. Hmm. Yeah, free
Yeah,
market. They're big on that. I can't say I disagree. I used to
yeah,
be very
huge
reluctant
fan.
about Texas when I was younger, but the more I learned about it, the more there is to like. But talking about the oil shock a little bit, because obviously we're talking about the pipelines. So we've been talking quite a bit about, is it going to drive a recession in Canada? You
Hmm.
want to go over about a few things that you actually found about that?
Yeah, so let's start with like the like why this matters. So I think that you have to observe like a sort of range of potential outcomes, and the range of potential outcomes from my perspective is I think I started at like you hear a lot of people talk about stagflation, but I feel like that's not like a really credible argument because the economy is growing, like, and it doesn't really show like that it would stop, because most of the projects don't depend heavily on fuel that are growing, like your data center capex, or a lot of these large projects like we're talking about in Canada. Um,
It'll
I would
just
say we're
increase the
probably
costs. It'll increase the
yeah,
cost of
yeah, it
building.
would
Yeah.
increase the cost. But that's just more money
Yeah.
spent by the
Yeah.
government that ends up in private savings, right? So,
Yeah.
um, the classic MMT argument. So there's, let's say, okay, so in the middle is kind of stagflation. So you get no economic growth, you get inflation. To the upside, you would have uh, inflation plus economic growth. And then to the downside, you would have deflation or disinflation as a result of an oil price shock where it causes demand destruction. People can't afford to buy things, stop buying things, and then you would get a recession. I'm of the opinion that we'll probably end up with like either the upside or the downside scenario. I think stagflation, like, I don't know. Do you think that is possible? Like, I feel like maybe a short, like very, very short period of time, but not like a long term stagflationary economy.
Yeah. I feel like I don't. Yeah. It's kind of hard to say. I think it might vary depending on the country too, right? I think
Yeah.
that might vary, like comparing the U.S. to Canada. Um, if I had to probably guess, because I, what I come back to is that K-shaped economy, right? So I always think that the top of the K will probably just brush this off, and for them, it's just things they continue to spend. It's not a problem. Where I do wonder the impact of higher oil prices, higher gas prices, and energy prices, which will ripple through a whole lot. There's second order effects if you just think about the food, and we're not even talking about fertilizers just yet. I do wonder, yeah, like that demand destruction, how big it will be on that bottom of the K and what kind of impact it will have. It just, yeah, I kind of flip flop because of there's some consumers that will have no problem absorbing this shock
Hmm.
and just continue because they own assets, because they've they own good jobs, they have savings, it's not going to be an issue. But I really do wonder like how it's going to weigh, and is there going to be more weighting in the top of the K, and then the economy just keeps growing, there's some inflation, maybe it picks up a little bit, levels off, or do we really see that demand destruction of the lower part of the K, which is the majority of people, really start pulling down the economy, and then you see a lot of demand destruction happening from there.
Yeah. Yeah, I feel like it's it's kind of more of it ends up being a disparity question. Like, does the top end of the K, like, wealthy people don't spend disproportionately more because, like, they don't consume like uh, a million times more food than the average person, or a million times more
Yeah.
couches or houses or whatever, rent, than the average person because they have a million times more money. So on the consumption-based economy, which I think is like it's greater than 50% of the U.S.
It's two
economy, right? And,
thirds.
and in Canada,
Two
yeah,
thirds.
there's
Yeah.
66%. Yeah.
Yeah.
So, you know, I like if you're counting on disparity to drive economic growth, it's not a really a sustainable model, right?
I'm not
Like,
saying it's good, but just I do wonder,
yeah,
not that their spending would necessarily increase, but it would just continue chugging along, right? They wouldn't really see the impact. I just don't know
yeah,
if that will outweigh. It's almost like market cap weighted when you're talking about the S&P 500. If you look at the S&P 500, you compare it to the equal weighted, it's like two different worlds.
yeah,
Like
yeah, 100%.
yeah, you see how the strong are lifting everything else, and doesn't mean that the index is up. I don't know how much it's up so far this year, maybe like 12%. Doesn't
Yeah,
mean that the overall index is doing well, just means that the top dogs are pulling pulling their weight and then some.
Yeah. So, but like, how does that translate to the consumer? Because that can't be true
Yeah.
for people spending money. I don't think.
No.
I could be wrong, but I don't. I think it's like it doesn't.
Yeah. But I think it'll,
People.
a
Yeah.
lot of it, you know, and I think we're getting there, but a lot of it will have to do how central banks respond, right? So I think, I don't know if you saw the paper I found by the San Francisco Fed. So they did a study back in 2023. And what the TLDR is that they found that the um, contractionary pressures from oil spikes are actually, you know, a lot of the contraction is due to how central banks will respond. So if rates are already high and banks don't do anything in terms of rate, they leave them there, it's likely to be more negative. If rates are near zero, and they define that as 0.5% or less, then it could actually be expansionary when you have increased in oil prices, because what happens is inflation expectations actually increase. So if you have extremely low rates and they're near zero, they're not changing, but inflation expectations are going up, you're essentially saying that your spread between the rates you're getting and inflation are expanding, so the real rates are actually going much lower. Um, so you can have some additional economic activity because of that. But they also found that if central banks start hiking to tame inflation, if that's their main goal, that's when you can really start getting into some pretty not severe, but some contraction in the economy. So their findings was that it's most likely, a lot of it will depend on how central banks react. However, one caveat of this study is that a lot of it was centered around Japan, because they had
Mm-hmm.
near zero rates for so long. So they did a lot of the studies around there. They use other countries as well, because we've seen you know, near zero rates for periods of time in the last couple decades in Canada, Europe as well, even the U.S. But they also measured when they saw price increases from oil, about like oil increasing more than 10%. So whether that applies right now or not, we'll have to see, because the increase is much greater than 10%, and it could be greater than that if it doesn't get resolved in the Middle East anytime soon. And then the longer it lasts, the more of an impact you can also have on growth. So there's all these different things. Of course, the study was 2023, so they studied the information that they had. But it is interesting that they found that a lot of um, the impact of those rises have to do with what central banks do.
Yeah. Um, so what do you see happening then in regards to, like, if I'm, I guess it's not Powell anymore.
No.
Well, you know, like I don't see anyone hiking, right? Like, you know, and I think I've pulled up like the chart about the bond market being wrong all the time, right? Like, or
Yeah.
Fed fund futures being wrong all the time. So, um, you know, if the market, obviously, like, it makes sense that the market is pricing rates to go up as it stands, but like, because it has to use inputs that you can't just invent inputs or like make assumptions based on like that until we know that an oil price spike is going to cause demand destruction. It would be irresponsible to assume that it's going to cause demand destruction. So all we know right now is that it's materializing in inflation. In clearly in the US with what's happening, you know, I mean, we discussed PPI, which we should actually probably talk about as a leading
Yeah.
indicator on CPI.
Mm-hmm.
But you know, inflation's what, 3.8,
Yeah.
and
That's right.
so it's obviously materializing in inflation in both the US and Canada's a little bit slower, our basket's a little bit more creative. But it's all like consumers can feel it. That, you know, you would assume inflation means rates go up or at least stay higher for longer, but rates don't really change. They can't stop the war in Iran, right? Like, so the Fed can't hike away that. So I don't see the Fed actually trying to respond, because monetary policy is not really a tool that is going to do anything about this type of inflation. If they're concerned that the economy is running too hot, which it doesn't really seem to be, but if they're concerned that the economy is running too hot and that's fueling further inflation, and the inflationary costs are getting absorbed too well by the consumer, by businesses or anything else in the economy, yeah, like they might do that. But I don't have any reason to believe that they would. So, um, like hikes feel like a very unlikely scenario
Yeah.
here, right? Like,
But
you
based
you
on this
agree?
study, just the fact that if they do nothing, that could also have a perverse impact, right? So they definitely looked at it when it was near zero rates. I'm not advocating that they should get the rates near zero, but
Yeah.
even not doing anything could start slowing down the economy just because rates are probably a bit like I mean like it's hard to say where rates should be if we're being really honest here, but you can probably argue that the rates are already quite elevated in terms comparing to the economic growth we're seeing.
Right. Yeah, I would agree with that, but that doesn't give them runway to cut yet. Like, they're going to have to wait for some negative economic data
Hmm.
before they have like sort of the market's
Which
permission
is
to cut.
lagging, right? So they, that's been the issue with central banks with Powell, Macklem.
Mm-hmm.
I mean, the reason why they hiked from what, like 0.25 to 5% within what, like 6 months, was it
Mm-hmm.
roughly?
Yeah.
Yeah, 6 month period. There's a reason they hiked so quickly because they were behind the ball. Like,
Turned out inflation wasn't transitory.
yeah, exactly.
Who would have
So
thought
they,
that two years of helicopter money and record low interest rates would result in entrenched inflation?
yeah, that's it. And it's for anyone listening, I do encourage you. So we're referencing PPI. So that one came in year over year, and this is the final demand PPI. So there's different. That's the headline one, but they have intermediate demand. So it just depends how far into the producer chain you are. But for the most part, the final demand PPI is the one that's referenced here, and it was up 6% year over year. It's the largest monthly increase on a year over year basis since 2022. So
Yeah.
I think it was December of 2022, the last increase to that on a month, and that was when PPI was actually trending down. So it had peaked around, I think, 11% and was starting to trend down.
Yeah, and basically, if you pull up CPI,
Hmm.
pull forward CPI by 2 to 3 months, you get
Yeah.
like basically it. So it's pretty clear what's going to happen here. I think, like, unless and so if I think, like, our original conversation on this discussion was, this is like a near immediate um, massive spike in
Hmm.
inflation. So, within the next 2 or 3 months, you end up with CPI that's at like 4, 5,
Yeah.
6.
It's not
The
one for
consumer's
one, right?
crushed.
Like, yeah,
Yeah,
people
of
need to
course.
realize it's not one for one, but there is a correlation. So there's a strong correlation between the two, and there's limitations to it. PPI versus, for example, services, right? Some services will have a lot less, especially if we think a lot of this has to do with higher energy prices. Well, depending on the kind of services, some may be very impacted by higher energy prices, where others will have very little impact from energy prices. So you have to keep that in mind. But for the most part, you pull a table and you had that graphic, like you pull a table side by side, month by month, PPI and CPI, and it's pretty crazy. You literally just look at PPI and then look a few months like ahead after that,
Yeah.
and you start seeing CPI going up.
Yeah, it's like it's a scary setup. I understand why folks are concerned about this. So then, if we end up with a CPI that jumps up, if it follows the correlation, like, there are periods where it breaks, right? If you look at like
Mm-hmm.
2010 here, you can see like the correlation breaks a little bit. There's some spreads, increases in spreads, but, like, the correlation's strong enough that it's worth observing.
Yeah.
If the correlation holds, CPI's at whatever, 4 or 6%, 4 to 6% range. Like, this is going that is not a good setup, right? Like, this means that people are going to be experiencing serious financial stress. Yeah.
Mm-hmm. Yeah, exactly. I mean, how much flexibility do a lot of people have right now? Like
None. Like, this is the
it's
thing.
just,
Like, at
yeah.
least in Canada. So, but the challenge is that in the U.S. So let's actually, like, dive in on this one, because
Mm-hmm.
in Canada, like, the consumer's been tapped out for years. Like, we there was a period where we were deleveraging a little bit. Coming out of, like, kind of that rate hiking cycle, people started to shore up some equity and pay off some debt because capital costs were killing them. and then we started levering up again. And now you're seeing people piling on credit card debt. Credit card debts are rising. U.S. is the same thing, but I think that the U.S. consumer has a little bit more runway to absorb this than the Canadian consumer. Like Canadians are, and that's just based on what I would say about like household indebtedness. I'll find the charts that I'm referencing and pull them up. But the we can't cut too much before the Fed. I think so. Like we kind of are forced to follow whatever the U.S. Fed does, and does like there's nothing that tells me that they're going to cut anytime soon. I think the data will change over the next couple of months, but as it stands right now, like they're not going to cut into 4 or 5%, and until they start seeing job losses and any kind of recessionary indicators, GDP contraction, whatever it is, right?
Yeah, no, yeah, it's hard to disagree with that. And I was trying to find some data on the amount of people that are living paycheck to paycheck, but it's
Oh,
still
the Canada.
pretty high.
I'll pull up the
Yeah,
Canada one. Yeah,
yeah, the
yeah, yeah.
Canada
No,
one.
it's yeah, yeah.
And then you have
Um,
to factor in for the U.S. I know they've the repayments for student loans restarted, but I think there's some deadlines coming up where people will soon be forced to restart the payments. I think those are coming up
yeah,
soon. I remember reading that somewhere, so that could be a pressure point for the U.S. I'm just going based on memory here. I don't have anything in front of me, but a lot of people have student loans in the U.S. And potentially some student loans that will be difficult to pay, especially if there start being some job losses. But what we're seeing at the very least, it seems like people who have a job are keeping it for the most part. The hiring, there's not too much hiring happening, but if you have a job, you're okay. So I guess
yeah,
that's the saving grace, right? Like for now, at least.
yeah. Well, the other thing is like the U.S. Mortgage insurance system is paying like hundreds or like millions of dollars in delinquent loans every month as well. Which like stopped being talked about because people were using it kind of as like a criticism of the Biden administration during that, but it was actually it was a Trump COVID era policy where it started, and it just kind of ended up lagging. But like none of that's been unwound like that. So there's that. There's student loans in can. This is the interesting part on this chart to me with Canada is like you can just see like Canada when everybody else, well, the UK and the US obviously started to delever after '08, and Canada just started piling on debt. And we like I was feeling optimistic when I started to see this down leg here on Canadians delevering heading out of the rate hiking cycle, but then we started
Yeah.
to increase our debt to disposable income, and it makes me fearful. Like we cannot weather an economic shock nearly as well as the US. So like Canadians the best case outcome for Canada is that the sooner that we see a global recession that gives us more runway to cut, but without destroying the currency and importing inflation is, I mean, it sucks to have to say that that's like the outcome that you're cheering for because that's obviously not a good outcome for anybody. But um, I mean, that's probably the only thing that could really save us from like a big mess right now. I would say personally, I don't know. I mean, not to be too like too bearish about it, obviously, but that just feels like that's the reality that we're faced with right now.
Yeah. Yeah. I mean, it's kind of weird watching markets. I'll be honest. Right now, there's just a lot of stuff where a lot of it comes back to the energy shock or the oil shock that we're seeing in the Middle East. It does seem like you're on one hand obviously following more the stock market, but you're seeing almost people fully brushing it off. Right? People were concerned when it started in March, and then we were texting about this. Like semiconductors, so chip stocks has just been on an
Yeah.
absolute tear, just driving up the stock market, and it's probably helping, honestly, keeping the economy up because of the wealth effect. So if you have those who are
Yeah.
holding assets, obviously it's not the majority; it's a minority of people who hold the majority of assets. But if those people feel wealthy, they'll keep spending and prop up the economy. So I do wonder what would happen if we got a sharp market correction, and how I know the stock market is not the economy, but because we're so consumer driven, two-thirds of spending comes from consumers. At some point, you have to think that a sharp market correction would have ripple effects in the economy and force some of those bigger spenders to actually potentially start cutting back on their spending.
Yeah, I like I can't I can't imagine a world where that doesn't take place, right? Like there's like what circumstances under which can this perpetuate forever? I guess like if the printer just keeps running, right? Like if they're just if money supply, like that's really the but that would just fuel more inflation, no?
Yeah,
Can you show
I
me
mean,
bond
you'd
yields?
think so. Yeah,
Oh,
so no,
semis
I'm
still.
just showing, yeah, the Philadelphia Semiconductor Index, so stocks, for those not familiar with it. It's just been on an absolute tear. The kind of stuff we haven't seen really since the dot-com bubble. So in the past year, that's up 137%. Past month, it's up 27% alone. 6 months, 71%. And then if you
Crazy.
start looking here, so SMH, the ETF, that's an interesting one to look at too. So this one is, just think about your favorite chip stocks. They're all in there with the largest ones being more heavily weighted in that ETF. And yeah, over the last 3 months, it's up 41%. It's same kind of thing in the high 20s for the last month. And then you're looking at names here in NVIDIA, 16% of the index, TSMC, 9%, Intel, surprisingly, 8.5%. That's probably the most concerning one here, if for me, is Intel. Because Intel, for those who are not aware, is actually still losing money. Obviously, it went through some big restructuration, but um, there you go here. Like this is absolutely insane. Like it's if you're listening to this, it's essentially like parabolic what you've seen
Yeah.
from Intel since the end of March. Like the stock.
Is that's when Trump bought it, isn't it? Like it
No,
also
no,
doesn't help
they
that
no,
like that
no,
that
there
Donnie's
was
just on TV like telling people what stocks to buy all the time too.
no. I think well, the U.S. government got a position in Intel. I think it was last year, late last year in the fall. So they
Right.
got a stake in Intel, but they're still losing money. And now they're just trading at an insane valuation. I mean, it's 543 billion in market cap, and
Right.
that to me is a good indicator that there's a lot of froth in there. And then you have, but on the other hand, you have just these companies that are spending absolute crazy amounts in capital expenditure, for a lot of it going to those semiconductors. So I'm showing here the capex, so capital expenditure spent by Google, Meta, Microsoft, Amazon, and Oracle. So a lot of the big names building those data centers, and the hyperscalers. And I put the projection of capex spending for 2026. And this is not super accurate because if you listen to the conference calls, it seems like every quarter they're adjusting their guidance up in terms of capex spending. But roughly, you can kind of ballpark so far this year. The estimates is that they'll spend about 750 billion, just these five companies. So yeah,
Crazy.
yeah, so think about that
Crazy,
for a
man.
second. So yes, maybe semiconductors stocks have gone up too quickly, too fast. But then on the other end, you have these companies that a lot of them are just doing it with just profits, free cash flow, right? With their own cash flow that they produce, and they're still producing free cash flow, and they're still spending these crazy amounts, issuing debt at low rates, with the exception of Oracle. But that would be the other probably side of the argument, that there could still be room to run here. But it's also probably an explanation why the economy is doing okay right now, because you have, I mean, the sheer the sheer size of the numbers I just said, it's going to have at least a short-term ripple effect in the economy to the upside.
Yeah, like this is it's economic growth, right? Like this,
Yeah.
of course it will. It's just
Mm.
that it won't be like I don't. They're concentrated. This is the challenge. But I mean, like same thing as pipelines. Like any of these massive infrastructure projects, which is what these are. And Canada saw this with housing during during the pandemic. Like they all have they produce positive economic growth. It's just not necessarily it's localized, and it could and fortunately or unfortunately, it ends up getting concentrated into the hands of very few, and so it doesn't. Who knows if it'll end up distributing properly to grow the economy, right? Like broadly. And I don't know. Like, I guess the other question when you're talking about AI is like, if we end up getting all of this compute, AI keeps improving, making workflows better. Obviously, a huge headwind for jobs, like for entry level labor, but it's also a massive tailwind for productivity. Like, I think StatCan put out a report saying 18 plus percent, or there's an 18 plus percent improvement in productivity from firms adopting AI in Canada. Um, you know, like we do this stuff. We build AI tools for real estate professionals. Like that's
Hmm.
the business that I'm at. Like that's what we do, right? Like that is really our primary function. We monetize that as a real estate brokerage or as a SaaS company. But like that's like we're a tech company that builds those tools for real estate professionals. Um, the amount of like stuff that can be automated away from these like simple mundane like dragging paperwork from one place to another, the like, and that's like 90 80 90% of like what work is right now, like for most people. So if in like like AI is the worst that it's ever going to be right now,
Yeah.
like, so it's
And
if it's going to get
who
better.
like, and also just an easy example, who would hire a research assistant right now?
Yeah, I know it's funny because like I'll
Yeah.
talk to rooms full of realtors and they're all like, oh, like I'll talk about like what's like the hedge against this, and they're like, oh, like better, like critical thinking skills or like better analysis. I'm like, no, like I'm not protected. Like I'm the least protected real estate professional in
Mhm.
this industry right now because I have very low EQ. Like I'm not an exceptionally good like emotional person. People who can build strong relationships and understand their customers' needs and meet them are the ones who are going to be um, successful in any business, right? Sales will be a very defensible skill. Personal brand will be a very defensible skill. That's why you and I do this stuff,
Mhm.
or at least I, is one of the reasons that I do, right?
Yeah.
Um, Analysis, aggregating data, doing like a lot of what we do right now is actually not really a defensible skill at all. Like one of the top ranked, it'll be interesting to see how this plays out because,
Mhm.
they talk about economic analysis being like this like skill that AI should be able to do very well. But so maybe it solves the economy. But if you're like analytical professions that definitely have a short shelf life in current
Yeah.
economy, right?
Well, the most difficult thing about economic analysis is just human behavior, right? You can you can look at the past, you can look historically, but history often rhymes, I think is the saying, but it often rhymes, but there's a reason why it's not exactly the same, right? So you have different variables that are in place. You might have others that are very similar to the past, and then trying to make projections based on that. I mean, you sent me a really good post about why oil isn't trading much higher. A lot of
Mm-hmm.
oil analysts, and I've listened to some really
I've
sharp
been
ones.
surprised, man. Like
Yeah,
that's
a
why I've
lot
been
of
like
oil
buying. Like,
analysts
yeah,
would have thought it would have been probably closer to 150 $200 a
yeah,
barrel at this point if the strait was still closed 2.5 months into this conflict, and it's hovering around $100. And these are some of the smartest people when it comes to that, right? They dedicate their life to analyzing the oil markets, and I was listening to quite a few, and the arguments they were making made a whole lot of sense. But then this post also, brought up some good points. Some I had already seen before, but you have, when you have traders that are potentially going long, they might also start seeing the Truder in chief, Donald Trump. They know he's unpredictable. They know that any post could impact the market, so they start not being as long on oil. Maybe hedge it, maybe do it for a shorter period of times. And we've seen Trump with his posts impact the price of oil. I mean, we've seen it drop from 120 roughly to like 195 by saying that there was a peace deal in place or truce or whatever word of the day he's using, or a ceasefire. And how much it's impacted, that could have been one of the things. There's also what's publicly available, or I guess what were they using? Kind of the known oil reserves versus the unknown
yeah,
ones that could have an
yeah.
impact on that too. So there's my point being is that there's all different kind of factors that
Too many
we may
factors, man.
too many factors exactly that we may not have seen when
Yeah.
this all started, and that we maybe brushed off to the side a little bit too much and trying to make some price predictions that would have been significantly
Hmm.
higher, but not taking into account those potential other factors. And that's why it's so difficult to predict. Like, I don't think AI would have been able to predict that. And I don't know if it will be able to predict that 2, 3, 4, 5 years down the line.
Yeah. I like you're right. Yeah, you're absolutely right. It's a good point. Um, we had a couple of questions here, so I want to get to them to be thankful for all of the
Yeah,
people
yeah.
who leave us questions in the chat here. So Andre asked, let me pull this one up here. Um, this was back when we were talking about the people levering back up. Do I think it's lack of discipline as well? I think that for sure, like Canadians have proven that we cannot be trusted with credit, right? Like and cheap debt. I mean, look no further than CMHC MLI Select that has basically turned into like a rental market casino lately. That being said, like I think we do have a really like we do have bad financial discipline in Canada. Canadians like to pile on debt. They are not good at deferring gratification. They always want a new car, shiny house,
Yeah.
bigger car, bigger house, shinier car. You know, for
The
sure. Like
status
that's
status is big, right? Like
yeah,
you people
for sure.
people think that, owning that brand new BMW, Tesla, whatever it is, will make them happy. And
Yeah,
I've seen some good posts. I think the Wolf of All Streets, I can remember his name on X. He's pretty big into crypto, but he posted something where he bought his like, I'm sure he's a multimillionaire, but he bought his dream car, and just to realize that a month in, it was just sitting in his garage, and
yeah,
he's like, "Yeah, probably the dumbest purchase I've ever made. I'm looking to
right.
sell it now," or something like that. Maybe butchering the pose, but I think it's just a good indicator that sometimes people just get into the mindset like, "Oh, I want to look good. I want this thing. I want these material things," and
Hmm.
they lack the discipline. They just kind of go ahead, lever up to buy it, and then you know, lo and behold, a month later, they're like, wow, now I'm drowning in debt and I have this thing that I
Yeah.
can't even enjoy because it's stressing me out too much to pay for it.
Yeah, I think like wealth creation isn't complicated. It's like spend less money than you make, and if you don't, if you can't do that, then you have to either make more money or spend less money, and then convert savings into assets as quickly as possible, right? Like
Yeah.
as efficiently as you can do that process, you will be successful. Anything that stands in the way of that is going to be a net negative. Yeah, like it is. I think it is a discipline thing a lot for
Hmm.
Canadians for sure. We didn't learn during the global financial crisis because we didn't go through the same economic pain as anybody else. I think we're kind of paying. We're paying for it now, right?
Yeah.
Um,
Yeah. Yeah. Exactly.
there was some on Instagram here, and for those of you still watching on
Yeah.
Instagram, I apologize. The crops messed up.
Yeah.
But
Well,
we're gonna
I'll
fix that
only
for
have
next week.
about another 5, 10 minutes.
That's
I'll
right.
have
Well,
to start
yeah,
looking
that's
after
perfect.
my daughter soon. So,
That's okay.
yeah.
Yeah. We touched
For
on
the
this a
record,
little
my
bit.
wife is looking at her right now. She just has somewhere to go in 5, 10 minutes.
Yeah.
So,
Yeah. All good. Um, the okay. So, what are our thoughts on selling federal assets to fund nation building projects? So, ports was the one that was kind of proposed
yeah.
in the new article that we mentioned today, but
Hmm.
also have already kind of been publicly discussed. Look, this is like I talked about the cognitive dissonance of this. Like, if your politics or economic perspective lean conservative, you should support privatization, right? Like, you can't
Yeah.
just hate it because Carney's doing it. That's my like that. So that's my take on this, and I would typically lean towards the private sector doing a better job at a lot of things than the public sector, and so for the most part, I would say I support privatization of a lot of these things. I don't know what your thoughts are on there.
Yeah, I think wherever it makes sense, right? I think I've always thought, and that hasn't really changed. I think sometimes the government has to step in for certain infrastructure projects because it's just not viable from a private perspective. So if you're thinking, I'm thinking here like a small city airport that would need to, still have an airport that's rarely used. I'm gonna say the private sector is probably not going to
Right.
want to operate that, and if they do, it'll probably just make it will not be good for the community. So I think for me, it's more that where I think for the most part, I'm in favor of that where it makes sense and the private sector can run it better than the government. But in other situations, I think the government has to step in more case by case. But I don't think it's a bad idea to try and sell some of those assets. That could be run better by the private sector and use the proceeds to build projects that will create more value for Canada as a whole, as a country. So I don't
Yeah.
think it's a bad idea. Yeah.
I think the airports is a really interesting one. Like, and
Mhm.
ports probably the same thing. Like, airports are already privately run. Like, I don't like people are acting like like something is materially going to change. The only thing that would change is that the government currently makes money leasing the land that the airports are on to the operators of the airports. You know, most or many airports are already privately run. So it's a real estate play and it's a divestiture of real estate to give it to somebody who probably like there are companies out there that are better at owning real estate than the Canadian government. I promise. There's many of them, tons. Um, if they can free up billions of dollars and it's not at the cost to the taxpayer, I don't doesn't scare me, right? Like that um, doesn't bother me too much if as long as that capital is reallocated into productive things. This one I wanted to hear your take on too. U.S. 30-year Treasury yield soars to 5.12%, the highest since the run up of the global financial crisis. What's your opinion on this? Somebody asked that. Galen, thank you for the question, Galen.
Yeah, and I mean even the 10-year, it's up
Yeah,
4.6%.
yeah.
I thought the U.S. government would try to intervene somehow because it seems like anytime
They
this
can't. I
new
think he's proven he can't.
no, exactly, because every time we've seen since Trump and Besant have been into power now for what like a year and a half or so, it seems like the threshold has been like 4.5% for the 10-year, and
Yeah.
yeah, the 30-year is getting up there and 5.12%. I mean, could be different things. Look, the amount of debt the U.S. government's taking on is not decreasing. If anything, it's accelerating. It could also be the bond markets realizing that this Middle East conflict may require the U.S. to spend even
Spend a lot of
more.
money. Yeah,
Exactly.
so they're just basically like, oh, that's going to be a big demand for bonds.
Yeah,
Let's just
it's
go
gonna.
now. Yeah.
Yeah, there's gonna be more supply of bonds, and then clearly, if you have more supply, demand kind of remains stable or doesn't keep up with supply. Clearly, you have this kind of. I mean, I didn't realize. I looked at it. I think yesterday was like 4.5. Like,
Yeah. No, yeah, it jumped up.
am I crazy? Like, it just feels like I was pretty surprised to see almost 4.6%. I mean, to me, it might just be the market. Yeah, just a supply and demand imbalance and the market becoming like increasingly nervous about the state of the US finances in general. I mean, now they have to pay back a bunch of tariffs right after the tariff revenues after the Supreme Court. Not that it's probably a drop in the bucket in the grander scheme of things, but at some point these things add up, right? They have these tax
Hmm.
refunds too coming out. Like at some point you got to get more money coming in. They have all these unfunded liabilities with Social Security that will just
Yeah.
keep getting worse and worse. No political will to make any radical changes to that. Like it's not looking
Yeah.
good.
Nobody
Like
wants to spend. There's nobody running that wants to spend
yeah,
less money. Like it's just
no,
math, right?
exactly.
Like
Yeah.
if you're trading bonds, you're like, I can see that the government is going to need more money, so I might as
Mhm.
well just set my yield demand higher, right? Or pay less for
Yeah.
bonds.
Like personally, I would not touch anything more than like a couple years in terms of
Hmm.
U.S. bills or bonds. Or U.S. Treasury is probably the better term to use. So I do have U.S. dollars, but I typically just keep them in U.S. Treasury bills. I mean, it gives me a higher yield than the equivalent in Canada, so can't complain, and I'm fine dealing with the fluctuation in interest rates
Yeah.
or in
Yeah.
exchange
Fair
rates.
enough.
I mean, yeah.
All right, man. We'll leave it there. I know there's a couple
Mm,
other questions, but or just kind of comments. Thanks for Rob.
yeah.
AI data center stuff with Kevin
Mm,
O'Leary. I'm gonna we're gonna talk more about that. That's why I didn't cover that one here. We're gonna do. I think we have Braden locked in. I don't know. I'm still waiting to hear from him. But for
yeah.
Toronto Tech Week, hopefully the 20
Sounds like
or
it.
the
Yeah.
29th show. Yeah.
Hmm.
So we'll talk. I'd rather just get somebody who's like obviously super qualified to talk about the AI stuff. He's pretty embedded in that space. So, we'll research as much as we can, but we're going to cover that in like its own kind of dedicated episode. Andre as well. Thanks for the comments on YouTube there, and yeah, everybody. We're gonna keep doing these. I think like they're going really well. TikTok we had like 180 something likes on it, so that's good. And then Instagram, I'm gonna figure out the crop. That's my goal.
Yeah.
That's my
Yeah.
task for next week. I got to figure out how to crop
Yeah.
this thing properly on
We
Instagram.
gotta
But
I gotta show you how to schedule them too. There's a way to
yeah,
schedule them and it shows up so
yeah,
people can
okay,
actually get reminders in advance.
cool. All right, yeah. Well, thanks a lot everybody for tuning in. Simone, have a great weekend. Have fun with your daughter this afternoon, and
Yeah,
yeah,
we'll do.
we'll see you again. See you all again as soon as we can.
Yeah, thanks everyone.